Well, let's just take a turn into private markets now. And, with the vast array of products on offer, it's worthwhile thinking about what happens to private markets, private credit in particular, in a falling interest rate environment. Alan Greenstein, CEO of Zagga, joins me now to discuss. Alan, welcome to Ausbiz. Thanks for joining us.
Thanks, Nadine. Appreciate the opportunity.
Yeah, it's great to have you here because, it's private markets are just so hot right now. But does some of the heat come out as interest rates start to fall?
Well, I think that the term private markets covers a lot of activity within private markets. And obviously, some of that relates just to business finance, other to real estate finance, some of it to other kinds of private activity. So I think that interest rates impact different parts of the market in different ways. I think that the overall comment one can make is that interest rates reducing is definitely good for sentiment. People start to think more positively, the sentiment improves. Rate cuts make people think a little bit more positively about how to invest and where to invest. But again, obviously, from a private market point of view, you have two sides of a coin. There are those depositors and investors who are looking for high rates for their money, and they're the borrowers who are looking to be able to borrow at lower rates. So you have to try and create the balance between the two. And that's where I think if we're going to have a private credit discussion, you have to think about, well, are we talking on the investor side or the borrower side?
Okay. So you're talking specifically about commercial real estate private credit, are you, Alan?
Yes. Property private credit or real estate private credit.
Okay. So just talk to us about some of the dynamics in a falling rates environment, and as we see inflation as well start to wane. Are there benefits of being in commercial private credit now?
Absolutely. There's certainly benefits. I mean, firstly, let's just accept that private credits, from an investment point of view, is an excellent way for an investor to achieve transparent, consistent income all the time. And that income is generally not correlated to markets. So from that point of view, certainly. And from a borrower's point of view, it's a great opportunity to be able to access sources of funds, which, may be a little bit higher than traditional banks, but at the end of the day are more than sufficient and certainly priced well enough for them to be able to carry out their projects. So I think from a commercial property point of view, commercial property is generally going to be the big winner. Although markets are pricing in further reductions, we don't really know when those reductions are going to come in. As your previous section said, the Reserve Bank is still very cautious. And Governor Bullock has made it clear that although they've agreed to this cut, they're going to look at the inflation data and all of the other data very carefully before they come to another cut. But the big thing for commercial property is that what the rate reduction does is it stabilizes cap rates. And when cap rates stabilize, it means that the gap, the buy-sell spread narrows. And when the buy-sell spread narrows, then more transactions go on the table. So from that point of view, I would say that this reduction and further reductions are going to help the commercial property market in terms of just becoming a little bit more active because it's been very cool up to now. Mm-hmm. On the investor side of things, investors generally are still going to earn the same margin over the cash rate as they've always been earning. So although their nominal return may be lower in terms of the headline number, as the official cash rate goes down, and if the privates are still maintaining the same margin, then for those investors, actually their return is the same. So they should be able to look at that positively too.
Okay. So when you think about some of the commercial property markets, you expect to see more activity there. What is your sense of the health of the commercial property market in Australia? Because we hear so much about residential housing and the dismal state of activity there. Give us your view on commercial.
I think like many things in Australia, commercial depends on which postcode you're talking about. So it also means what part of the commercial sector you're talking about. So when we think about commercial, we would treat residential that is being built for end user occupation as part of commercial. So developers developing residential, developers developing shopping centers, service stations, apartment buildings, office buildings, they're all part of commercial. And within that, you then have to redesignate between high rise, low rise, etc. On an overall basis, as I said, I think that we think commercial will benefit from a reduction in rates because cap yields are just going to become a lot more manageable. So hopefully you will find more properties available for purchase by developers, the cost of that development coming down, and therefore the purchase prices for those coming down, allowing more people into the market. I think that some of the dismal situation around residential, as you call it, perhaps has more to do with other issues in the form of the fact that we have a significant residential shortage in Australia, and much of that comes from the difficulty that developers have in getting building approvals, which are lagging considerably and which we know that some of the state governments are paying attention to. So my overall message to you around commercial and the reduction in rates is that it's generally a good thing. It's good for sentiment, it's good for cap rates, and it should result in activity. But on the other hand, the word of caution is, let's not forget, we've only had one cut. And I think we've all been thinking about the fact that we had 13 increases very quickly. And some of us are thinking, well, maybe we'll go in reverse. And I think that would be foolish to think that it's going to happen like that. I think that the way down is going to be a lot slower and a lot more cautious. But to the extent that it creates positive sentiment on both sides of the sector, I think that that will be generally a good thing. And certainly we believe that the reduction in rates will ultimately lead to that.
Well, thank you. I'm glad we checked in. Really appreciate your time, Alan.
Thank you so much.